picture this. It's dark outside. My 5-year-old is in the back seat, and we have been tasked, just due to how our family schedule worked that day, that my daughter and I were to drive to the Tesla dealership and pick up our vehicle that was getting repaired. Sounds easy enough, but a couple things to know. For Tesla, everything they do is primarily run through their app. And my husband mainly deals with all of that. So before we did this, I knew I wasn't super familiar with what this should look like, because it's going to be after hours and like, where do I put the key? How do I get into our car? You know, the whole thing. So I be sure to ask him 1,000,001 questions, because I'm going to be uber prepared for this drop off. After that, I am texting with the service center through the app to make sure I completely understand, ask any questions, and then I call the service guy just to make sure I have a complete understanding of what this journey is going to look like. If you have ever had to do something new that you want to be prepared for, I'm sure you as well have done your research, make sure all the boxes are checked, and you have a full understanding of what this situation is going to look like, right? So here we are, fast forward, it's dark, it's late, I have my 5-year-old, and I can't find her car. I am driving around this parking lot thinking, they said it should be right here, I am in the service lot, I don't see my car. So now I'm out of my vehicle with my phone, with a little flashlight, looking for my vehicle, that this should have been like a 30-second drop off and grab and go home situation. So I finally find her car. I get my daughter loaded up into the vehicle. I'm good with the trade-off. I'm in my car. I go to check into the app to say, okay, I have my car. I have dropped off your car. We are good to go. As I pull up the app, I see immediately that there's a notification that says, click this button and we will flash your car lights and beep the horn, so it's easily findable. Now, I talked to 3 different people in preparation of how to find our vehicle. Not one of them mentioned that. I have no doubt all of them knew about that step and maybe assumed I knew, but I didn't. And if I were to go back and do it a second time around, that would be a 30-second drop off. I would know exactly where to look. I would know exactly how to beat my horn, where to drop off the car, where to leave the key. It would be a quick grab and go situation. Well, in today's video, we're going to do something similar. Maybe not go to a dealership, but we are going to walk through our free 5-step free QuickBooks file audit. And basically what that means is we're going to walk through a QuickBooks file and go through our super easy 5-step checklist of what you can look for in your QuickBooks file to see if there's any red flags. So again, this might be something you feel super confident with, not really comfortable, maybe just never looked before and didn't know what to look for. Let me tell you, after walking through it one time, you will be a lot more comfortable the second time around. So let's go ahead, hop in, and explore QuickBooks. But if you are new here, welcome to our channel. My name is Katrina. My business partner Cheryl and I run and own Empower to Profit, where we work with small business owners just like you, teaching them how to put more profit into their personal pocket. Because if your small business isn't even making you any money, is really all of this work really worth it? So come on in. Thanks for following along. Let's jump into today's teaching. Okay. So here we are in our QuickBooks. This is a sample file just to give you guys an idea of what it would look like if you were going to use our 5-step auto to go through your QuickBooks file. So the first thing on the audit is reconciliations. If your reconciliations aren't up to date, it's not a sure thing that they're going to be wrong, but more times than not, when accounts are not reconciled, there are errors in there, duplicates, things are reconciled inside of the register, instead of the reconciliation screen. It can just really turn into a mess. So what that looks like is you can go over to the transaction screen and hit reconcile. This one is never done before because it is a pretend file, and it's going to bring you to the screen here. You're going to drop down this tab. This is where you're going to see your bank accounts and also your credit card accounts. Let's just say we're working on our checking account. We have our statement from our bank in front of us, and the ending balance is $2,000.89 for the month of December that we're working on. You're going to pull this up and you're going to reconcile through this screen. This is not necessarily a how-to video this time on how to reconcile. I just want to bring flags to your attention of what you would look for. So that's how we get to the reconciliation. Now, if we go back to the reconciliation screen here, if you go to history by account, it will show you when the last time this account was reconciled. As you can see here, it's never been reconciled. Huge red flag. Another thing you can do is go to your bank registers like this in your checking account. In this tab here, if it is reconciled, it's going to have an R in it. None of these have an R in it, which means none of this has ever been reconciled. Definitely a red flag you want to dig into and get your accounts reconciled up to date. 10 out of 10 recommend reconciling every single month. All right, so the second thing you're going to look at is here on the transaction tab. You're going to be looking at all of your bank accounts, all of your credit cards, everything that's going to be feeding into your bank feed. And if you look at these two numbers right here, these numbers do not match. Really, are they even close? So this is a definite red flag that something is off, because that means your bank balance is not matching what we have in the QuickBooks software. That's going to be a big problem. You do want those to match. They don't always match, but we do want them to match. So you're going to go to your bank register. There's a couple ways to get there, this being one of them. And if you start scrolling through, you'll see all of these C's. Here's an R. And then there's some in here that don't have anything at all. So that means that these ones were added maybe intentionally, maybe by accident, maybe it's a duplicate. You want the majority of your lines here to have a green box and then to be reconciled every month. If you're reconciling every month, it'll be super easy to spot where there's a mistake. That first red flag being, when you're looking at these bank accounts, is going to be these two totals here. Again, they're not always going to be aligned perfectly every single time, but ideally, you do want those to match. And if your books are done correctly, and if they're done correctly from the very beginning, they should always match. So this third one is a little bit delicate. It tends to confuse people and even accountants because it's a little bit of a tricky situation. But if we go to your chart of accounts and you're going to look up undeposited funds, and now undeposited funds is basically a holding account, a pass-through account, a clearing account, many different names for it. But really what it is if you think about somebody giving your business money, say they give you $100 cash for a purchase, and you hold that cash until you deposit it into the bank. Undeposited funds is at $100. It's not deposited into the bank yet. So yes, it's in your business. You have received the money, but you are holding it until it gets put into a real bank account. So that's why we call it undeposited funds. Different softwares might call it something differently, but here we're working in QuickBooks. This is what we're going to be looking at. So when you're looking at undeposited funds, you're going to want to scroll through the register, and every so often you should see it zeroing out to make sure all of the funds that are coming in, you're being held, and then also passing back out to be deposited. If it's not ever zeroing out, that means you are recorded funds being received into your business, but never officially deposited into the bank or accounted for. So that's why undeposited funds, it can get really hairy really quickly, especially if you are invoicing or attaching a third-party software. It can get really messy, but undeposited funds should be looked at least monthly to be sure it's being maintained. This one right here is not being maintained correctly. You see how there's all these high accounts, and then once in a while a payment will go out, but it's never actually zeroing out to get down to close to a zero number. Definite red flag in this books. All right, so the next thing we're going to be looking for is at our balance sheet. We want to make sure that everything on our balance sheet makes sense and that it looks good. So you're going to scroll over here to reports. You can click on that. I like to favorite balance sheets for our clients, so it's right at top there because it's a report that you should be looking at really frequently. And so you want to make sure your dates are set correct. So let's say we're looking at last year's books in full. Okay, so I'm going to set my date and then I'm going to begin scrolling down. So up here, you're going to have your banks, your accounts receivable, your assets that you have. Below that are your liabilities. So any accounts payable, your credit cards, any loans, sales tax, those are going to be listed here. Below that, you're going to have your equity. So what are you looking for to be a red flag? You don't want there to be any negative accounts. Very rarely should you see a negative account. This set of books looks really, really good. This opening balance equity is okay for it to be negative depending on how you file taxes, but nothing that we'll dig into right now. This undeposited funds, I would dig into that because really you want to be close to zero, like we just talked about. And being that there are funds that we have collected that haven't been deposited into any kind of bank account or spoken for, something I want to look at. Other than that, everything looks good. The only other thing that I would really recommend looking at is making sure that you have all of your assets on the books that are over $2,500 worth in value or that you paid for, and any loans that you're paying on. Make sure those are accounted on the books as well. Okay, so the last red flag that we're going to look at here today is going to be our profit and loss report, which is probably the most familiar report that business owners have in QuickBooks. So again, we're going to pop over to reports. I like to favorite it at the top. If it's not, you can always scroll or type it in up here. And we're going to pull that up. Let's say again, we're going to look at last year. Pretend that we're reviewing our books for the full year. And then you will be able to see everything broken out here. A couple of things you're going to be looking for is that there is no expenses recorded as income. So nothing is really jumping out to me here. You want to be sure that all your COGS are recorded correctly. Another really important piece to remember when you're looking at your P&L is you don't want any loan payments recorded on your P&L. That's something that goes on your balance sheet, and you're putting that towards the loan that you have on the balance sheet. You're going to want to separate your interest out. That is going to be an expense on your P&L, but not the actual principal payment. Another one is if you purchase a piece of equipment that's over $2,500, that's an asset that you're going to put on your balance sheet. Two other accounts I like to look at when we are reviewing a P&L. This uncategorized expense should never be used. So you're going to want to open that up and categorize that correctly. There's another line that QuickBooks includes, and that's uncategorized income. And I don't see it used on this file, but sometimes if people don't know where money came from, or for whatever reason, they throw money into that account, that's not helpful for you. That's not helpful to file taxes. You're going to want to separate that out and give it a name. And then another one that can be used is like an ask account. So whether ask my accountant or ask business owner, maybe you name it, I'll get to this later, or I need the receipt, something like that. Those are accounts that aren't really putting expenses to a specific bucket, which is what you're going to need when you file taxes. So biggest thing to do is to scroll through. You can even do spot checks into accounts. There's not a lot of expenses in this specific set of books, but like you could pull up this income, and that's going to pull up this report where you can go through line by line to make sure everything was accounted for correctly. I hope you feel a lot more comfortable now going through your QuickBooks file and having a heads up on what to look for, what the red flags are in your QuickBooks file. And if you guys have any questions at all about today's YouTube video, drop a comment down below. I would love to answer your questions. And as always, cheers to profit.